Welcome to my podcast where I talk about all things related to money mindset, finance, business, and investing. My name is Royston Cumberbatch, a qualified accountant with over 30 years experience in finance and business. Coming from a very humble background, I have continuously challenged the assumptions and the expectations of what I'm capable of achieving for myself and others. Over the years, I've helped hundreds of entrepreneurs to decipher finance and to make more money and to run highly successful businesses. On this podcast, I will share with you tips, strategies, techniques, and tools that you can use to make more money, manage money better, and to maximize your success. In today's episode, I have a very special guest with me. He's a founder, co-founder, investor, entrepreneur, and as a private equity specialist. Welcome to Mike Henebery. Before I get Mike started, let me give you a brief overview of Mike's journey. So basically, Mike was a key member of the Gresham private equity team that led the spin-off from Zurich Financial Services and raised $600 million from 20 large insurance and pension funds between 2003 and 2006. He's also led some big deals between 2000 and 2007, investing over $200 million and returning over $450 million to investors. Was also previously founder and co-founder of two startups. One is called Paleo Capital from 2020 to 2013, raising $100 million for a new private credit fund that narrowly missed an IPO in 2012 and subsequently became a Europe division largest credit hedge fund. Mike, as I said, is also a founder, co-founder, so he's also a big entrepreneur. And Mike is a shareholder of Fabify. Fabify is the platform for apparel brands, basically where you can get really great brands at bargain prices. Check it out, Fabify.com, Fabify.com. The forecast revenue for Fabify for 2021 is $30 million, and an IPO is planned for 2022-2023. What makes Fabify so special is that all of the customers are acquired for less than €10 and have repeat purchases of over 7 times in 1 year. That's quite a bit, man. So 80% of the forecast revenues are from repeat purchases. Most of Fabify operations are actually outsourced. However, all social media performance advertising is designed, planned, and executed in-house. Wow. Fabify has given Mike a deep experience and understanding of how social media performance and advertising works. Wow, that's quite impressive, man. He's also the author of a book about his career as an investor and entrepreneur, which is publishing in Q2 2021. It's called Wrestling with Unicorns. Do write it down and do check it out when it comes out. It's also the founding partner of Titan Partners, which he launched in 2020. It's a B2B consultancy which serves SME owners, managers to boost revenue growth through 5 pillars. 1, innovation. 2, reimagining their business model to harness disruption. 3, investment in digitalization. 4, better exit planning. And 5, more efficient social media marketing. Wow. Welcome to Mike Henebery. So Mike, good to have you on the podcast. And look, I can see from your career that you've been quite involved in a number of things, but obviously you also been involved in like SME lending and now you are a co-founder of Titan Partners. So just talk about your journey today in terms of business and finance.
Thanks, Royston. Pleasure to be here with you and looking forward to our discussion. I'll try and give you a kind of brief overview of my journey, and then maybe we can dig a bit deeper into the areas that you think are more interesting for your viewers and your listeners. Essentially, the common thread through my career has definitely been working with and helping the growth of small, medium enterprises. And it all started off training as a chartered accountant in the late 80s in Birmingham. And of course, a lot of the clients at that time of Arthur Andersen, which of course is now part of Deloitte, were indeed small, medium enterprises. So that was my first education, ranging from chemical companies, actually some fairly substantial chemical companies like Albright and Wilson, right the way through to the pop band UB40, which I'm sure
Wow.
you'll be familiar with. So
what a range of different businesses.
Yeah.
My first question is kind of, how would you think your finance training, your accountancy training, because obviously I'm an accountant as well, how has that shaped your career?
Well, I think in a number of ways, and I think by far the most important influence was the people, because, you know, one of the reasons I joined Arthur Andersen was the people that I got to meet already, even before joining, I could see had a certain sense of drive and style about them. And, you know, that was borne out when I joined the firm. I mean, Arthur Andersen did have a very strong culture. It's no coincidence, I think, that one of my colleagues from those days is now chairman of Deloitte Europe. It's a guy called Nick Owen. Nick was actually at university with me and then joined Arthur Andersen same time as me. He joined in London. I joined in Birmingham. So I was circulating with some very impressive people, both as peers and then, you know, the guys I was learning from, the guys that were sort of 2 to 5 years ahead of me. Many of them I'm still in touch with, you know, incredibly supportive at that stage of my career and certainly pushed me to drive towards higher academic goals. And of course, I was studying until I was 25. I actually finished my PE2 Chartered Accounts exam on the 12th of December, 1989, my 25th birthday. You know, and I remember walking out into the snow on the Hagley Road thinking, hopefully, hopefully that's the last exam I ever take. And
makes sense, yeah.
Of course, it pretty much was. But, you know, incredible time because you're working sometimes 10, 12-hour days. And then, you know, if you include the sort of commuting to and from the client, and then, you know, you're studying in the evenings and at the weekends. Look, I was getting football in too, but it wasn't really much work-life balance. It was pretty much work and study balance.
I know it is, man.
You know, you put a life around it.
Yeah.
I think big sacrifice in your early 20s, really, to put the amount of time in. And I can assure you that I was no natural accountant. So for me, it was quite a lot of hard work. And I've only realized in retrospect why, because I think as my career has developed, it's become more obvious that I'm much more of a creative than I am an accountant. So I was kind of battling with the more structured side of qualifying as an accountant. But of course, it's been a valuable training. But, you know, if you look at how my career developed from there into advising management teams on management buyouts and then into investing as a private equity chief investment officer for 10 years at Gresham, then setting up my own credit fund in 2010 to 2012. That was a company called Palio. We were totally right about Palio. We saw the market for leveraged lending from institutions separate from banks. Yeah. We saw that going up exponentially. And in fact, it did 10x over the 10 years following setting up Palio. Unfortunately, even the smart investors in London couldn't see it as clearly as I could at that time. It was an incredibly frustrating time. We must have met over 200 limited partners at that time, and very few of them actually got what we were talking about. By far the most evolved was actually Christine Panier at the European Investment Fund, who did back us in a private fund. But unfortunately, we couldn't get enough private investors around Christine to support that as an independent private company. So we pivoted and went for a listing. And my listing was literally days away from being done, but I was scuppered by a rather, how can I put it, incompetent regulator down in Guernsey, who I've only found out in retrospect in writing my book, Wrestling with Unicorns. I did a bit of research to actually figure out who was this regulator that kind of basically put our IPO on ice. I had a green light in London, you know, the most highly regulated market in the world, pretty much. But I got an amber light down in Guernsey, and there was never a clear reason for that amber light, but it delayed my IPO by about 2 or 3 months. And of course,
shocking, man.
You know, you can't do that with an IPO. You can't keep an IPO on ice. And I had over $1 million of my own money invested in getting that IPO done. And I think we'd have ended up with $1 billion AUM company. I mean, it was going to float with between 100 and 150 million under management day one. You know, that would easily be $1 billion under management by today, you know. But look, as I like to say, and I do say in the book, you know, even Jose Mourinho doesn't shoot the referee when he gets a bad decision. You know, you just have to dust yourself off and go again.
Of course, you know what I mean?
You know, we tried to launch that strategy on a French hedge fund. It should have worked. They were a liquid lending hedge fund, more than our kind of illiquid private equity strategy. Of course, they were French, we were British. I don't really need to say anymore. It just didn't work out. It was a clash of cultures, liquid versus illiquid, French versus British. One of those things. I mean, I'm sure they're very good guys, but we just couldn't see eye to eye. And we were putting up what I consider still today to have been fantastic lending propositions, and they were just turning them down. I mean, companies like Mountain Warehouse, U-Switch, companies that were going through great growth profiles.
Wow.
Steelite, which is one of the leading companies in the potteries. It was actually making the earthenware for the Kremlin, so you can't get a much better client than that when it comes to making earthenware. It's been around for over 150 years, Steelite. It's a brilliant company, very well run. It had been through 2 management buyouts, and actually the management were taking it kind of independent. They were buying out the private equity funds, So anyway, we put up all these deals. None of them were getting approved. And by then I realized that I was pushing water uphill. And what do you know, 2014, 15, I was a little bit bored having left the credit fund, and I pivoted into e-commerce. What an amazing pivot that was. I think that was either a stroke of genius or something extremely impetuous or something halfway in between. But of course, it took me into a whole new area. I'm not claiming to be a digital e-commerce expert. Who is? Really, that whole area has only been around for probably 10, 15 years maximum. But we're all learning, so I feel like I'm going to school every day in that business. I ended up in a company called Fabify.com, where I'm still the second largest shareholder. We have plans to take that to the stock market in the next 18 months to 2 years, maybe a bit sooner. It's a company with an incredible scaling capability because we have this model where we can serve up our consumers with fashion apparel deals that they can't get anywhere else on the internet. And that's because we're partnering with big fashion brands who always every year have a lot of overstock. But of course, in the pandemic, they have more overstock than ever. So we're helping these big brands to liquidate that overstock by putting them in touch with cost-conscious consumers all over Europe. Although initially we're setting up in Eastern Europe, and we're doing that because we can acquire consumers more cheaply. Basically, around 10% of the cost it would be to acquire consumers in Western Europe. So that's been a very interesting journey. It's taken us 4 or 5 years now to get that ready to scale. And when I say scale, this next 12 months, we're looking to go to 1 million revenue a month, and then probably 2 million revenue a month within the next 12 months. That would have us, just to give you an idea of what that means in sort of social media spend, that would have us going from spending something, what I like to say investing, because it's all based on data science. It's not spending, it's investing. About 50,000 a month to begin with on Facebook ads, and probably £500,000 sterling a month within 12 months.
How big is your team? How big is your team to do all that?
Well,
obviously the operational...
It's a great question. And I think my business partner, Phil Harwood, has set this up in a very evolved way, because what we've done really is managed to outsource as much as we possibly can. We actually got to the stage back in Q4 2018 where we were doing around $100,000 a day in sales. And it was one of those only fools and horses moments. Rodney, we're going to be millionaires. We thought, wow, 100,000 a day. That's heading towards a 30 million revenue business on a per annum basis, But unfortunately, at that time, internal fulfillment, our own warehouse couldn't keep up with the pace of sales. And that led to late deliveries and a lot of cancelled orders. And one of the beauties of our model is that we rarely suffer from returns, unlike many fast fashion business models where typical returns can be as high as 30 or 40%. Our returns are well below 2 or 3%. But at that time, because of the slow deliveries, we got a lot of cancelled orders. So we had to basically switch off sales. We decided to do a number of things. We realized there were a number of things we needed to do to scale quickly. We had to put the business on a better platform. At that time, we were on Shopify, which wasn't allowing us to check out in local currencies in different countries around Europe, which we needed to be able to do because our consumer base is paying cash at the door in countries like Bulgaria, Romania. They need to be able to pay in their local currency. So that was one thing, replatforming. Then we had to find an outsourced warehouse operation. which took about 9 to 12 months to find somebody we could rely on. Found a fantastic business out in Bucharest who are doing that for us now. And we also need to find a digital team, but by virtue of hooking up with the warehouse operations, the guy that runs that had actually run a company called Fashion Days in Romania, which was quite a successful high volume, low cost fashion scale up. And he connected us into about 10 members of the digital team. And by digital team, I mean people that were doing things like multi-language websites in different countries. You imagine the detail around getting the product descriptions right, especially when you're uploading new stock every day. There's quite a lot of fluidity to the stock on these sites. So you need to get product descriptions accurately. There are different terms and conditions legally in each country. So you need to get your T's and C's with the consumers right. There's a whole myriad of detail, but we were very lucky to inherit 8 to 10 members of his digital team from the Fashion Days. It's a bit like getting the band back together. And that was a bit of a stroke of luck, really. And it's funny how on the journey you get amazing strokes of bad luck. And then, of course, if you're patient, you get strokes of good luck too. And then the other thing that we did about 12 months ago is we started connecting with experienced executives in the fashion world who started joining us. We created this advisory board because there was no way we could afford to hire these guys full time. So we were paying them part time and incentivizing them with some options. But they've been incredibly good. They've gone well beyond the call of duty in terms of their commitment to the business. And they've been very powerful in connecting us into big fashion brands all over Europe, because the other critical thing that we needed to change was our supply chain had previously been coming from one company who is a business partner of ours and are very good at what they do, which is basically multi-brand reseller, wholesaling business. And they do that all over Europe, but they're a very offline business. And obviously they have a restricted supply being, one company. And really we knew what we needed to do was hook up with big fashion brands. And by virtue of connecting with our non-executives, we've been able to do that. And we're now able to connect with any fashion brand in Europe. Although I should emphasize that the typical shop retail price for the kind of products we're selling is somewhere between 50 and 100 euros, maybe 25.
What are you actually selling? What are you actually selling?
Fashion apparel. So it's everything that you would expect to find in, a New Look or a Mango or a Topshop or any of these fashion stores. What I would describe as mid-market fashion stores. So the typical retail price in the store might be 25 to 100 euros, but on our site, you're probably seeing it at 60, 70, 80% off store price.
What is your site?
It's called Fabify.com. Yeah.
How do you spell it?
Fabify, Fabify.
Cool.
So Fabify, just like Shopify, Spotify. I think it's a great name.
Great stuff.
We managed to pick that name up about 18 months ago. About 2 years ago, actually, we got that name. And so we also rebranded at the same time as we were doing all the other things, because we previously had a name that we thought felt quite good 5 years ago. And you're going to laugh at me, Royston, because it was called Black Betty, which, came from Phil's appreciation of 70s rock music. But you could just imagine us trying to take that name to America in the context of Black Lives Matter, So we realized that wouldn't be a good idea and flipped it.
Change your name, right?
Fabify, yeah.
Yeah, so Mike, so just concept time. So if you step back, right, if you say if someone, a business person right now, they already have a business, maybe they're making, $1 million turnover, and they want to scale. What are some of the key sort of lessons you say, mainly from a financial perspective or from a kind of a financial management perspective? What are some of the key lessons you would say that you can, anyone listening to this can take away, or things that they should have in their business, the things that they should be looking at in terms of like making decisions? What are some of the key things that they should consider, mainly from a financial perspective?
Totally. Well, there's a couple of things I'll refer you to there, Royston. When I joined the Fabify business, the first tough conversation I had with Phil Howard, who's the founder, was about the business model that he built, because the financial model. Because I said, look, Phil, speaking honestly, and I said, look, that's what you're paying me to do. We're not going to raise very much money with this business model, with this financial model. So the first thing we did was invested quite a bit of time and effort, and probably a 3-month project, to create a financial model that reflected our business model. And the reason that was important was it gave us a much better insight into the way the business was going to scale and some of the key sensitivities, and we surprised ourselves on many occasions with the output from that model by creating sensitivities and variability around certain inputs. It really shocked us at times just how sensitive our business was to certain aspects that
very important,
we hadn't appreciated.
Sensitivities, right?
So it's really critical to have a well thought through financial model right at the beginning, which gives you a picture of how your business operates. And obviously, you need to figure out, what the key sensitivities might be. And it's only when you start running what-if scenarios with those sensitivities that you really see, where the pinch points are. So that was the first thing I'd say. And then latterly, in the last sort of 18 months or so, because really this Fabify business is much more of an investment for me than a job now, because as it goes to an IPO, they need a proper CFO, and I'm not really the kind of CFO that's going to take a business to the stock market. I'm much more of a creative investment type of guy, as I mentioned at the beginning, rather than a sort of hands-on detail numbers guy. So I've got to thinking really, what was my journey about? And I started writing this book, Wrestling with Unicorns, and really how I've tried to design the book is as a playbook for owner managers to focus them in on some of the things that are critical in terms of growing and scaling. And
what are those things?
There's 3 or 4 things that have emerged from that. And the very first thing is innovation. And it's really shocked me how universally, really, most companies, particularly small, medium enterprises, don't know how to instill a culture of innovation. A lot of companies run in silos, with one department not really speaking to another. Communication
I've seen that.
Inevitably poor in most companies. People haven't really got common goals, certainly not a common understanding of what the short-term and long-term targets are. And this is almost, again, universally not being driven down through the organization. And the reason I can tell you that is Gallup did a study, and over 70% of the global workforce is disengaged. So, if you're running a business and you think your workforce is engaged, think again, because 70% of workforces are not engaged. And it's a pretty good, starting point to try and engage your workforce, because guess what? Innovation is really about having an efficient and effective internal ideas machine.
I agree.
Good ideas are being created. The not so good ones are getting shot down, but shot down objectively, with good creative thought. And the best ideas are getting attracting to capital and time, to get developed. But it takes.
I completely agree. You know something, right? Only yesterday I was saying to some people that even though you're running a company, you have to allow your employees thinking time.
Exactly.
Time to sort of look out the window and just think and come up with ideas. To me, that is kind of the whole crunch point about being innovative. Would you agree?
Totally, and it's very interesting you mentioned that, because there was a book in sort of researching this. I've been looking at other books that have been written that might be relevant learning points. And there's a lady in America who wrote a book, I think at least 10 or 15 years ago now, about why California created so many unicorns in the 20 years after 1990, and yet Massachusetts didn't, because in the 80s, Massachusetts was the place that had most of the high-tech companies in America. And she concluded that it was really all down to the way that people collaborated in California. They were geographically a little bit closer together, but where they were in those hubs around San Francisco and LA, they were often meeting in restaurants and bars and discussing ideas. And actually, collaboration is a critical part of innovation. And really, Dr. Dave Richards, who works with me in the new company, Titan Partners, and Dave is a global thought leader on innovation. He very much pushes the fact that innovation is a team game. It's a people thing, and it only really works if you've got good communication systems and good understanding within a business between the people.
Oh wow! Look, so talk to me, Mike. So what are some
one other thing I'd emphasize, Royston, is digitalization. So the vast majority of SMEs are not properly invested in digitalization. What am I talking about? Use of the cloud, website UX, development of applications, cybersecurity. Less than 1 in 10 SMEs is properly invested in digitalization. And we collaborate with a company.
Technology, right? Is what you're saying.
Yeah, we collaborate with a company in America called Superior Digital, because obviously it's not our skill set that we bring them in. It's not a one size fits all. Obviously, every company, depending on its sector, has different priorities. But Superior Digital work with us to help our clients to specify what's required digitally within their business to take it to the next level.
So if a company is saying, right, okay, well, all these things are great, but I can't afford to, invest in this right now, right? And which going to lead me on to probably the next question. I mean, how would you advise for a business that wants to go big, in terms of getting funding, raising money? What are some of the kind of ideas you have around that based on your experience? How do you raise funds to get bigger?
Yeah, it's a very good question. I think raising money is challenging. There's a chapter in the book where we talk about the pitch. And of course, the story is very important. You've got to understand how to articulate your story. One thing that's changed massively since I started out in corporate finance in the early 1990s is the way those stories are depicted. We used to send out 120-page information memorandum in the post to potential interested parties, and then 3 weeks later we call them up and see who was interested in having a meeting. Nowadays, potential investors need information in a digital form that's easily digestible. If you don't capture their imagination in the first few seconds, you've probably got 3 minutes maximum to get the attention of most investors with a new idea. That depends whether you've sent them some information digitally on an email, a video perhaps, or a presentation pack, a deck, or maybe you're meeting them face to face if you're lucky, but it's very rare that you get to do that straight away. So we have to make our pitches extremely easy to digest, entertaining, and this is a whole business in itself. And most companies these days almost need to have their own internal digital video production unit, because actually you'll reach out both to investors and to certainly business to business customers and clients is almost certainly going to be done through video, through platforms like LinkedIn or YouTube.
Certainly agree, man.
So
I've started putting videos out regular now, just to
we're all having
awareness videos.
Yeah, we're all having to get used to, being in front of camera. I'm very fortunate that my son, who's 17, he has a bit of a sort of a skill set in video production. He actually works for 2 years as kind of the apprentice at a London-based film production company. So he's very comfortable with editing videos, the sound, the lighting. Unfortunately, Royston, he's used to working with professional actors in front of camera.
Yeah.
So he has to work with me now. So that's one limiting factor. But, we're actually working quite well as a team. And I've got my two colleagues creating video for the new Titan website. And of course, Matthew's he's editing most of that. And so it's you kind of need that service in-house these days,
Cool. So Mike, just before to wrap up, I think I'm going to have to get you on again, man. You have so much of information and so much of experience. It's hard to cover in just 30 minutes. But what I wanted to ask you, what has been your most difficult challenge along your way in terms of the journey? Yeah. And how did you overcome it, or what did you take from it as of lessons learned?
Yeah, I think the path to success is littered with failure. Is the truth, So when things don't go right, it's a real time to test your self-belief and to persevere. And I think most successful people have had to wrestle with setbacks along the journey, and it's how you deal with the setbacks that defines you, I think. And the paleo one was a good example. I could have just shut up shop and gone to the beach and said enough's enough, but that's not in my nature, and so I dusted myself down and got involved in e-commerce. I sensed it was time for a bit of a pivot, and a change of direction. And quite fortuitously, I think 2015 was a pretty good time to get into e-commerce. And I think we also have to trust our intuition in these things, because that was a bit of an intuitive move, potentially a bit impetuous and fast. The first thing I went into, I lost money. Of course I did. I didn't really understand e-commerce. But if I hadn't been in that business, which was based out in Sofia in Bulgaria, I would never have met Phil Harwood, because that's how I met him. We met out there in, two guys from London, and we met in Sofia, So it's funny how life works, But I think the most important thing is self-belief, perseverance.
Of course. Self-belief, I agree, man. I agree. So look, Mike, it's been great, man, to have you. I will ask you one final question. Hopefully you can answer it in a minute or so. What does financial intelligence mean to you?
Good question. I think a number of things for me, because it's what the first thing is you've got to be able to interpret the numbers. So you've got to be able to interpret a profit and loss account, a balance sheet, and a P&L. And the way I like to think of it is that the balance sheet is just a photograph on one day. The P&L tells you the profit, but it's the cash flow that's the most important, because
I agree.
Cash is king.
Cash is always king, man.
And when I was training in corporate recovery with Arthur Anderson, my training with Arthur Anderson split in 2 years audit, 2 years corporate recovery. The first thing we do when we went into any business that was struggling was to run a 13-week forward cash flow.
I agree.
And it was surprising how few companies did that and were doing it. And then it was surprising what that exercise threw up.
And still not doing it, actually. Many companies are not actually projecting.
It's still not a practice. No, I agree. It's absolutely critical. And then, of course, there is another one absolutely critical aspect, and that is the capability to make decisions. And Jeff Bezos talks about, the fact that we're moving into an era now where the successful companies have to make high velocity decisions, often only with 60 or 70% of the information that you need at hand. But you can't afford to wait till you've got 100% of the information, because slow is deadly. And I think this is also very important,
I agree. Yeah. So, Mike, look, I'm gonna wrap up for now. But I want to say thank you very much for coming on to the podcast, and we're going to be obviously connecting with you again, and probably working with you offline as well. It's been really great to have you, and we are going to be speaking, no doubt, very soon.
Thanks, Royston. Pleasure to be here.
Thanks a lot.
Thank you very much for listening to my podcast. I hope you enjoyed the show. You can find out more about me by Googling my name, Royston Cumberbatch. I'm on all the social media, Facebook, Instagram, and LinkedIn. You can find me on YouTube as Roy Cumberbatch. And if you are listening on YouTube, please hit that subscribe button, or you can find me on my website at www.racmacs.com. That's RACMACS.com. It'd be great to hear from you, and do feel free to tell me about any topics you want me to cover on future episodes. Until next time, be good to yourself and others, keep positive, and reaching for your financial goals. Bye-bye.